Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday, number 349, hosted by the Cal State Bakersfield Small Business Development Center. This is webinar number 349. It is June 11th, 2025. Got some great unique funding for those business to business looking for funding solutions. We've got just the guy for you. So yeah, if you're in the need for some great B2B funding, our funding source is here. He's got products to go over, a special guest that will have solutions. And we're going to have our economic corner that's going to look at some new inflation data that was just released earlier today. So inflation makes it back in the news today, maybe in a positive way, though. We'll have some news, information, and some of the resources to help you thrive. Our capital quarter, another one of our regular segments on Webinar Wednesday, is going to focus on capital in uncertain times. Also, your answers to your questions will be taking live after the presentation or maybe during, we don't know. But when we want to answer your questions is when you ask the best question possible. And you can go into the Q&A box and ask that particular question. So please go to the Q&A box, or you can actually also use chat, put it in the chat box. We will have our webinar producer, Maureen Busher-Dang, actually monitoring the chat and putting great resources for you. And we do have a poll today. And I think I caught some of you off balance that thought I was going to go to the poll right then, but just a few moments and then we'll hit the poll. So as you know, we do have our regular segment, our capital quarter, and that is resources for funding your business. And tomorrow we have a major event coming up in our eastern territories, our two eastern counties, in Inyo and Mono County. We'll have the Eastern Sierra Capital Summit. We'll give a brief preview of that tomorrow. That will be a live event. In the past, these capital summits we've done live. We have also hosted those over Zoom, over a 4-hour Zoom, and have made on demand afterwards. But as of this point, this is only going to be live, expecting a really good audience for the 8 to 12 a.m. segment. So if you can make it out there and you're in Eastern Sierra and got room, come on by. Also, we're going to talk a little bit about the many disaster loans that remain open in Kern County, and also mention that those are all now economic injury disaster loans. And the economic injury disaster loan, of course, made most famous during COVID is the COVID economic injury disaster loan, or the EIDL. But those are available if you're starting to show some economic injury from the disasters of the fires and slides and other events that have occurred. And usually those take some time, so we'll talk a little bit about that. And our capital quarter also includes Andrew Krone and his winning programs through Marble Bridge Funding Group, who we'll have on momentarily. But yes, tomorrow it's live and space is limited. If you need money to help grow your business, and you're in the Eastern Sierra, we'll be there tomorrow in Bishop from 8 to 12 at the Small Business Resource Center in downtown Bishop. We'll be having a lot of discussions on probably somewhere around 50 to 75 different programs that small businesses can actually access. And the great thing about small business funding and financing is that there are so many options that people don't know about. And that's why we do our 3 capital summits each year. The Eastern Kern Capital Summit, which was in February, Eastern Sierra Capital Summit tomorrow, and then later in the year we'll be at our Kern Capital Summit in downtown Bakersfield. But a lot of programs we'll go over, SBA lending programs that go up to 10 million, go down as little as probably 50,000 with some SBA lenders, but up to 10 million or more, getting into some of those fixed asset loans. Also, we'll have the small micro loans represented well, have a few of the sources that will be talking about some of the micro lending policies and practices that they have. We'll talk about crowdfunding, really kind of still the stepchild of raising money. We'll be having our expert tomorrow talk on Kickstarter, and he's done some great projects in the past. A great way to raise capital that you don't have to pay back. Also, we'll talk a little bit about investors and equity capital and some of the innovation grants, including the $3 billion SBIR program that actually has the federal government through 10 agencies funding innovation for small businesses. We'll talk about some of the unique and alternative sources and programs, kind of like today. Today's is a great, unique, and alternative funding program that just shows the interesting aspects of funding and what is out there to actually help small businesses succeed and have them piece together funding aspects. And many, many ways to fund, grow, and purchase a small business will all be on hand tomorrow. I think in your chat box, you'll find some links that'll be going toward that particular use. Talked a little bit about SBA disaster loans. And right now, in Kern County anyway, that there are disaster loans for a variety of federally declared disasters. Most of them are fires. About the only one that is not no longer open on this list, it looks like, is the landslide on the very bottom. And also the lake fire recently closed as well, but we have several filing dates coming up in July. One in August and also October is going to be the last time to really do something. And one fire here in Kern, the Borel fire that broke out the same time as the park fire broke out in Chico up in Northern California, that has economic filing periods until the June 21st, or excuse me, July 21st date. But also some of the other disasters that have occurred. And again, all of these are economic injury disaster loans. So you did not have to be a victim of the fire, of the winds, of the landslide and road closures. But you needed to have your businesses impacted by those disasters. And there's still a lot of government funding for economic injuries for those businesses that have been impacted. So a lot going on in the world of Capital Quarter, and more coming up soon. But let's move over to our economic corner, our look at our economy. And news today came out from the May report that inflation remained in check, which was less than expected. May consumer prices rose at 2.4%. So 2.4%, which was expected to be higher, and which literally leads me to ask one question. Are larger retailers that have the capacity to do so, have they started absorbing the tariffs? You know, that tariff hit to keep their market share. So, you know, big retailers have a call right now, and do I absorb some of the tariffs and try to keep my market share, or do I do something like pass them along and risk losing market share? So those are the things going on shortly with the economic corner. And actually, let's jump and go to a poll right now. I know, a little bit different today. I'm hitting you with a little bit different poll, and we're going to have a 2-question poll today on our inflation report that came out today. So we are timely, and we are hitting you with this right away. Is that what were the products that increased the most in price by percentage in May? Was it major appliances, peanut butter, bananas, or ice cream? We have a 2-part question for you, and not seeing a lot of participation here, which, there we go, we're in now. So we have May inflation, and the prices that increased the most. Was it major appliances, peanut butter, bananas, or ice cream? So continuing right along, it looks like polls being populated. Go ahead. Is it major appliances, peanut butter, bananas, and ice cream? Jump in. And the number 2, the second part of this question is that what prices decreased the most in the May report? So question 1, what prices increased the most? Prices 2, what decreased? Was it new cars? Was it tomatoes, furniture, or milk? So we'll give you a couple of more moments to jump in. We do have 46% of you participating in our 2 polls due to the May inflation report. And now 53%. Let's get another vote or two, and let's call this a poll. And with 53% of you, actually, thank you. We've got a few more, and let's end it right now. Let's end this poll right now. So with 61% of you participating. We had a dead heat, major appliances and bananas. And the correct answer to number one is major appliances. So major appliances increased the most in price in May, in the May report. And in the May inflation report, which decreased the most, well, we have a tie here between new cars and milk, and it was new cars. So you guys got it, because essentially I listed these in the order in which they appeared. So major appliances was one, peanut butter two, bananas, ice cream, new cars, tomatoes, furniture, and milk. So thank you so much. I think there are the results that you can see now for yourself. We have 50% for major appliances and 38% for new cars, 38% for milk. Thank you all for participating in the poll today. Okay, moving right along. Going on, and now maybe something that we talked about a few months ago with Dr. Evans about average pay hasn't kept up with inflation. So lower inflation is good. But one thing that we really didn't study much in here was the difference between, number one, the sizes of the employers and its effect on the California job market altogether, too. So average pay has not kept up with inflation, and this was data from 2020, the third quarter, to 2023, the third quarter, which was the latest EDD information that is out and data that's out. And it showed that even before the really super high inflation of 2024, inflation hadn't kept up, but it was a little bit better in Kern County for all firms, specifically for employers 20 to 48, but our under 10 employees actually showed a bigger deficit. So inflation hasn't kept up, but what we see though now is that inflation has at least stayed under control in May. So some of our resources to notify you about starting a business, a business boot camp that's coming up. It's going to start on June 17th, so that's coming up. There's 4 sessions. It's all free, of course, and it's hosted by your Central California SBDC region. And so great opportunity here to jump in and start with all the basics of starting in a new business. If you have employees and you have HR issues or questions, the California Employer Association hotline is a great place to go, free of charge, great place to start. And as you'll see that these are sponsored by many of the workforce development boards throughout the Central Coast, San Joaquin Valley, and Eastern Sierra. And you see the numbers there, the telephone numbers correspond to a particular California employer hotline specialist that will assist you with your HR issues. At the SBDC here, we have a variety of tools to help you succeed. Let's see what we have today. Well, our LivePlan business planning format. Our Central California region has 100 seats that we pay for through LivePlan and offer them to clients. Really popular with businesses that are looking for funding, particularly. I like to see businesses that are just planning for good profit growth and to really work on their profit margins and growth overall. But I understand that the financing issues are a big issue that come up. So one thing that we will see is that the LivePlan, our small business planning, is a great tool, and you work with your SBDC advisor on that, as is Vertical IQ. And Vertical IQ is an excellent tool for industry-based analysis. It is a tool that we're using widely at the SBDC and really shows you a great comparison of your particular business or industry. Reach out to your SBDC consultants. I recommend the industry analysis report, which for most industries is drawn by your NACE code. So it's very specific to the type of work that you are doing. And it is generally about 50 pages, and it's just chock full of great information. This webinar, like so many others before it, close to 300 of them, go to our YouTube channel. So our CSUB YouTube channel, which now has about 450 subscribers and 300 videos in it. You can check out and you can subscribe and get your webinar link directly We're seeing a lot of that, a lot of people now going directly to just getting the link and going in and watching it at their convenience, rather than me costing you a potential lunch if you got a potential lunch opportunity. Also, to contact us and sign up for our confidential, no cost, no obligation expert consulting, there's our website, CSUB.com. Come on in and use some of these great tools and resources, such as our LivePlan and our industry analysis, and get only the best expert consulting and advisors throughout the Central California region. And that brings us to today's special guest. And our special guest is Andrew Crone, a senior vice president at Marble Funding Group, which offers small business account receivable, purchase order, and contract financing. He's been with Marble for over 24 years. He has spent nearly 4 decades in the field of finance, national and international sales management, distribution, marketing, purchasing, manufacturing, and consulting. A recognized leader in independent business finance, served the U.S. Small Business Administration mentor as a loan committee member on the NorCal Small Business Finance Corporation and on the state of California. He's a very highly regarded speaker at workshops and conferences. We only have the best on Webinar Wednesday, you know that. But he's also even spoke at the California Economics Summit hosted by the governor of California. Andrew, it's great having you here today. Thank you for joining us. Jump on in here and take it away.
Okay, let's get you going. Thank you so much, Kelly, for the introduction. Nice to meet everyone today in the audience. And my name is Andrew Krone. I'm Senior VP, Marble Bridge Funding Group. You can see our little symbol behind me. I want to thank the SBDC for the opportunity to speak to you all today, and really encourage all of you, if you haven't done it, spend time with the SBDC. It's free. Their benefits are amazing. I've seen the work of SBDC now for 25 years. I've been working and consulting with SBDC finance consultants and directors for 25 years now. I know my little intro said 24. As of June 6th, I hit the big 25. No gold watch yet, but I know the company appreciates it. They actually contacted me and asked if I'd stick around for 25 more. I'll have to think about that. But I'm glad to be here today. I'm going to educate you on a topic that has a lot of misconceptions, a topic of finance that, unless you've spent time with me or an expert in the industry, most bankers, most consultants do not have a deep background in this particular type of financing. And we're going to go right into it right now. And by the way, if you have questions, as Kelly said, you can put them in the Q&A or in chat. I'm going to just go through this because there's a lot of information to cover over the next 20 to 30 minutes here. But we do want to leave time to answer the questions. My goal is to try to answer a lot of those questions within this presentation, because I know most of the questions small business asks, because I've been doing it for so long, and hopefully I'll cover that as well. And let's go into it. So Marble Bridge Funding Group is based out of Walnut Creek, California. We're about 28 years old now, and I've been here 25 to 28, and came into the company. A friend of mine owned the company, dragged me in, took a couple of years to convince him to come into finance, and I've been doing it ever since. I run the sales, and I also do the underwriting as well for the company. So what's nice about dealing with me is, in a phone call, I can figure out whether we should be able to help you or not, and with great success in doing it that way. We are classified by the state of California as a commercial finance company. We are a direct lender to small business. So if you're a B2B, business doing business with another business, or B2G, you're doing business with a government entity, we can fund both of those types of clients, and we do all the time. We have funded over $1 billion since our inception, the small business, and we are working on our second billion right now. And that's really a nice milestone for Marble Bridge. And we've had a tremendous success rate. In fact, when I talk about lending is always a risk to the lender. There are lenders in the marketplace that have 8% default, 5% default. Our default rate in the last 7 years has only had one client that we had an issue with in the last 7 years. There isn't one bank in the state of California that can claim they have a better record than us. And that is because we are very close to our clients. We really work hard for them. We educate them, and we make sure when we tab the right client that if they come in with us, we do everything we can to help them accelerate their business. And if you look at the little symbol behind me, you'll see a bridge and you'll see a dot on the bridge. That's really our client. Our goal of our client is to take them from point A to point B. And at some point, every client graduates from Marble Bridge. Typically, they either go on to traditional bank financing because now that's the better product for them in their product life cycle, or they sell the business, or something else happens that they move on. But our goal is to get you there, and we get you there as fast as you can grow the business. So the products we offer at Marble Bridge Funding Group are receivable finance, purchase order, and contract finance. So I can't tell from the audience who are you, or B2B or B2C, but this is really geared this conversation towards B2B. But if you're B2C business, doing business with consumers, a cash-based business, you still may want to stay on the line and listen, because this is something that you will get from no other type of lender, the information I'm going to provide. So in the world of finance, our industry is $1 trillion industry. And to give you an idea of our clients, and then I'll get into the products in more detail. And again, I can't see a show of hands, unlike when I speak live at SBDC conferences. I will tell you this. I guarantee all of you will say yes to this first question. And the question is, how many of you have been in a Home Depot? And I would assume every single one of you on the panel today have been in Home Depot. And if I had to say, how many of you have scanned yourself at the register when you checked out, so you did self-scanning, which I'm sure everybody in this room has done that. I'm the guy, Marble Bridge is the guy, company, who actually funded the company who put in those scanners originally. So you can thank me for working for Home Depot today. The other example of us touching your life, you've all been on the freeways in the state of California, and you see the lovely Caltrans signs that are out there that say, you know, don't drink and drive, watch out for Caltrans workers. That's another client of Marble Bridge that I funded for a while. Being where everyone is located in this audience, I'm 100% sure you've heard the term high-speed rail that is going on, the project that is building that section of rail down in the valley down there. For the last 5 years until recently, we funded the trucking company that moved all the dirt out of that market area. And so that was a very large company, had a very large need, needed $1 million in finance support, and we funded that company as well. So those are just examples of businesses that we fund, but because we are B2B or B2G, we are funding consultants. We fund all sorts of contractors. We play in the construction space. We fund engineers, architects, importers, food manufacturers, consultants, staffing models, nursing registries, security guard companies, any type of business that provides business to another business or government entity, and you have to invoice that business. So normally what that means is, and in the ideal world, you provide your product or service to a business and you get paid the next day. And I can't see a show of hands, but I bet you the majority of you who are in that space do not get paid the next day. You have to give terms. You get paid in 30 days, 60 days, 90 days, and occasionally you have those net nevers, which hopefully don't happen too often. If you deal with the state of California, guarantee usually 45 days before you see and get paid. So, and a lot of clients, especially in the construction space, those of you in that space, you have to work for 30 days and then you submit your invoice and you may not get paid for another 30 or 60 days. So essentially, when you're a receivable company where you're providing accounts receivable or invoicing your clients, you are the bank. You're carrying the credit, you're giving them the product or service, and you're waiting to get paid. And the problem with that is if you're too successful, you'll run out of money because you can bill fast, but you don't get paid fast. And if you build 50,000 one month, 100,000 next month, 200,000 the next month, you can see where the problem lies. You won't be able to make payroll. You won't be able to pay your suppliers and rent and the other things that you have to do to run a small business. Small business runs on cash flow. So for those of you who are B2C, business to consumer, like a restaurant or something of that nature, you get your cash right away. But everyone else that is B2B, B2G has to deal with this shortfall that takes place. And so in the world of finance, where do you go to get your money? Well, those of you who know are in small business, you've all had to figure out different solutions. So, you have stories, use my Visa, MasterCard. So you're borrowing at a very high interest rate. Some of you maybe have even used your home equity line, cheaper. And, you've lent that to the business, made a loan, and that's one way to do it. But not everybody has a ton of equity in their home to grab. You can go to the traditional bank. And so the definition of a startup business with a bank is you have to be in business 2 years and hopefully have a credit score of 680 or higher, and that you also have 2 years profitability. If you only have 1 year profitability, and it's hard for a startup to show profit the first year because of the investment, you're not bankable. In that case, you got to wait to year 3. So you don't have a line of credit. If you do get a line of credit from a bank and you did about $1 million in revenue, without even seeing your financials, a traditional bank line is about 10% of previous year's revenue. So you have about $100,000 line. And if you're billing every month, you're probably billing out on $1 million business, 80, 85,000 a month. And when you do that, the average person probably pays in 60 days. And so you're carrying 170,000, 160,000 in receivables, meaning the $100,000 bank line you have is all sitting in the receivables, not in your pocket. Well, what if you grow from $1 million to $3 million? You're going to have a shortfall. So there's where the problem begins. You won't be able to fund the payroll. You won't be able to get your suppliers. You won't be able to bid on contracts because if you get it, how do you fulfill the contract? So the whole story behind this is how do you get cash flow? That's where Marble Bridge comes in. So our type of financing is receivable finance. And there's different ways it's done. We have a very transparent model, a very simple model, and we're just going to dive right into this. So this is what everybody wants to know. How does it work? And how does it affect me? How does it affect my clients? So within receivable finance, you may have $100,000 in receivables and you're waiting to get paid. Using receivable finance, the type of financing that we offer at Marble Bridge, we operate sort of like a bank line, and banks sort of have this type of product, maybe a little bit different in execution, called asset-based lending, but you usually have to be at least $10 million or more in revenue. So they don't do it for small little accounts where a lot of our accounts are true startups, meaning that they will enter the marketplace with their first invoicing within 60 days. And we can bring in those types of clients. So we do work with startups and we work with companies up to 50 million in revenue. But most of the companies we see are start up to 20 million in revenue. And so you have this 100,000 in invoices, could be one invoice, could be 50 invoices, and you can submit that invoice for finance. And the simple math is we give you 80% advance on the invoice. And for most businesses, that is sufficient because most businesses have a gross margin. And if you don't know what your gross margin is, you should talk to SBDC and the consultants will help you figure that out. But it means you build out $100 and your labor and materials, one or the other, or both were $20, excuse me, were $80, and your profit, gross profit, would be about $20 or 20%. So we're giving you 80%. We should be able to cover your costs, and that's what we do. And you get the $80 wired directly to your bank account within 24 to 48 hours. You can fund today, you can fund tomorrow, you can fund as many invoices as you want. You can go 60 days and not fund anything. And so from a flexibility point of view, it's great. When you need the money, it's there. If you don't need the money, you don't fund. On top of it is, how much money can you get from Marble Bridge? We do have a cap, and that cap is about $5 million a month. I've been here 25 years now. I put out 4 million, but I've never put out 5 million. Most of my clients needs anywhere from 25,000 to 500,000 a month in support. So that's where a lot of them play. Some fund everything because they're growing so fast. They fund all their invoices. And so it's like a bell-shaped curve. They grow, they fund, they grow, they fund. And then eventually they grow so strong, they reinvest the profit back in the business. They get on the other side of the bell-shaped curve and they fund less, less, and less. And eventually then they're going for a bank and they're leaving us and going to a traditional lender. They'll give them the money they need, not for fast growth, but for just to cover where they are. They're happy being a 2 million, $3 or $4 million business. So we're advancing on your receivable side. As I said earlier, we give you the 80% advance and you get $80 wired to your bank account. So it's available that day. Eventually the invoice pays. The invoice collects, it's $100. With that collection, we pay ourselves back the $80 we gave you. That's how we get our money back. That leaves $20. And you can write this down, all of you that are listening out in the audience. The rate is real simple. The fees we charge are 1% each 15 days. So if you have a $100 invoice and it pays in 15 days, your cost would have been $1. If it goes to 15 to 30 days, it's another $1. So if the invoice paid in 30 days is $2. So my example on a $100 invoice, we gave you $80. We then collected the 100. We paid ourselves back the 80. We took it was 30 days, so we took our $2 in fees, and the $18 difference is wired back to you, and then we're done. You owe me nothing. So you can see, unlike a line of credit or a term loan that you're carrying the funds for a year or 2 years to pay off, we're invoice by invoice, and you control the funding cycle. I could fund up to 5 million a month, but if you only need 100,000, that's all you're going to fund. But if you take on a larger contract and you can invoice, that way you can use us. We can fund the growth of the company. So invoice finance is one of the types of products we offer. And it's the main one that most of our clients use. And I'll give examples of businesses that have used this service, and then it will make total sense to you. But that's a very simplistic view. And some of you are saying, well, let's see, if it went 45 days, Andrew, does that mean it's 3%? The answer is yes. 60-day, 4%. But if you have invoices that pay in up to 90 days, you don't have to fund the invoice day one. You might give me an invoice that's already 60 days old that's going to pay in 15 days. So you can control it. You control the funding. And when I talked about cost and where we fit into the model, and Kelly talked about this, and I have my own views on inflation, so I'll state it, not Marble Bridge, my particular views. Even though we said 2.4% inflation is running, I don't think there's anybody in this room that believes that number is what they're paying for insurance, for all sorts of services that they're buying, and definitely not for restaurants. Inflation is live and well, and even though the market showed a 2.4 today, most of you may not be aware of this. Oil is up over 18% in the last 18 days. And based on the charts that I follow, it's going to go much higher, which means fuel is going to be going up. And we are going to see more inflation, not less, going forward. And the full form of the tariffs, that hasn't hit yet either. A lot of people bought a lot of inventory beforehand, though you got an example today of some of the things that have gone up and down. But if we have steel and aluminum going up in a big way, cars, everything with metal, manufacturing, everything's going to be going up. So inflation is with us. If you're a small business, inflation is eating into your profitability. Insurances, if you have to buy products, everything is going to be going up, and everyone's going to pass everything to everyone else. So if you're only making 4% to the bottom line and net income or 6%, or a decent business making 10%, you will have no choice but to raise your prices. If you don't raise your prices, you will go out of business. Simple as that. All people will raise their prices. Nobody's going to get cheaper, at least not that I've seen. If people want to pay you in 60 days, 90 days, that's their prerogative. Even if you have net 30 terms on your invoicing, And so when you look at Marble Bridge, what my clients do, we're a cost of goods sold number. They're able to put my 1 or 2% into their cost, and then they're fine. You know, the client takes 30 days to pay. They're not worried about it because the client's already paying the finance cost. So if your labor costs more, your material costs more, financing is going to cost more. You got to load that into your cost of goods sold. So my clients put my pricing into there, and having a 1-2% cost increase, so from $100 to $102, is not going to affect the business. If you got a very sensitive business where any dollar increase means, you know, it could be the end of your business, then you got to really consider how you're going to survive in this environment. You're going to have to get way more leaner and more efficient in order to survive in the new environment we're heading into. But inflation is not going away now. It's not going away in the near future. And the budget deficits are getting larger. The dollar is going to get weaker. We're going to have more issues. You're going to need to be able to raise prices. The other thing, though, that my type of financing allows you to do, a lot of people don't think about this. If you're bidding on jobs, everybody's stating it's 30-day pay. So they all know the terms. So what if you come in and offer your client 60-day pay? That means you look stronger in the marketplace. So that's really a good way to go. If you look stronger, you might win the bid because you're giving better terms. Now, you may have a little bit higher price, but to your client that you're bidding on, the terms may be more important than 1 to 2% more. That means you may win more contracts. So with our type of financing, you can get more aggressive in the bidding process. But suffice to say, receivable finance gives you the cash flow you need to grow the business. And I'm going to come back to an example again. If you could bill daily, if you could bill weekly, I should be able to make you a multimillionaire, because you will never, ever run out of cash. As fast as you invoice is as fast as we could fund. So invoice financing has a lot of benefits. It's bigger as far as more money that you can get than a traditional bank line. And it actually makes you stronger than your competitors who are working on a limited line of credit, where you have sort of an unlimited line of credit. And you can be way more aggressive in the marketplace. If the business is slowing down, if the business is getting less and less profitable, receivable finance is not the right fit. The right fit for that is SBDC, where you need to go see the consultants to look at how you can transition your business, new products, new services, new business plan. The clients that come to Marble Bridge, from startup to established businesses, are coming to us because they are growing. Now, on the underwriting side, we talked about banks getting 680 credit score, having secondary source, home with a lot of equity, and all the things that banks like to see. My bar is one of the lowest bars out there. We have clients that are coming in here with 3 years of business losses, and now they figured out the formula, or the economy has changed for them, and they're now showing 3, 4, 5 months of profitability. We bring those clients in. I have one of those I've been working on for 6 months. He's finally figured it out. He's got it turned around. He got rid of the tax liens he has. He's coming into Marble Bridge, and he needs help now because he needs cash flow, and the banks won't touch him for 2 more years. And I have clients who've had a bankruptcy a year ago. Again, banks won't touch them for years. We look at the bankruptcy, we understand why, we see the business is doing good, we bring them in. So the underwriting is very simple here. I have another one with a 550 credit score, and it was even lower than that. And you have to work really hard. But the business went through a really bad patch. The owner had to use all his personal credit to stay alive. The business is now turned. The contracts are in. He's making money. He can't get traditional bank financing. He's coming to us, and we're underwriting that right now. So from an underwriting end, we are easier to underwrite than almost anyone out there. We want to hear the story. We want to understand what's going on. Now, I wish I could say I hit everybody, but if it's not the right product for you, I will tell you why, but I'll tell you what needs to happen to get in here. But we have a very, very high success rate. And if we start underwriting a client, we probably get about 98, 99% approved because I know what we look for. I know what we want to do. The 1 or 2% that don't get approved, I had a contractor that said he owed the IRS 16, 18,000. We were going to fund him to help him pay that off. It turned out he didn't happen to mention that he actually had a dispute with the IRS, and there was a dispute over $170,000. And it didn't show up until we run the transcripts. We're just like a bank. We do background checks. We do all the things a traditional lender will do. And we happened to find that. And what I did for him was get him to a better person to help him solve that with the IRS, which they are working on. So we weren't able to fund him at that time. I'm trying to get you 2 other products I have real briefly here. I do purchase order finance. So a purchase order means you got an order for a supermarket for, $10,000, $20,000 in product. The problem is you don't have the cash to pay the supplier or the person who's manufacturing for you, the contract manufacturer. You need money up front. And so purchase order finance is pretty good. It's about 75% advance, but we do have a very tight box on it. Number one, when you do purchase order finance, you will have additional costs because it will be a purchase order for a while. We need POs to convert to an invoice in 30 days or less. And generally the rates might be 3 to 3.5%. That would be cost. So you have to have the margin in there to make sure it works. And then it'll be a PO for 30 days, it'll be 2. So it could cost you 5 to 5.5%. But we're acting as your VC. We ain't taking equity in the company. We're allowing you to grow faster. Usually our clients are with us 6 to 9 months before we consider that type of financing. They have very strong clients who are ordering the POs, like name brand, that we know who they are. We know they're going to convert in 30 days or less. We're funding all the receivables because that is cheaper, but we do have the ability to do that. And the third product we have that's sort of like PO is contract finance. So contract finance literally means you have a contract and it's going to be a milestone billing where you have to bill 2, 3, 4 months in a row. And you have the ability to fund, let's say, right off the bat, a mobilization type of fee, and it's guaranteed to be paid in the contract. And I did that for a client building machines for Apple that took 90 days to build their $500,000 machines. They would bill Apple for the first 30 or 40,000, but Apple would take 60 days to pay. It was non-cancelable, so they would wait for the money to come in, and then they'd actually start building the machine. In our case, we funded immediately, saved them 60 days, speeded up the billing, the cash flow, and within 3 or 4 of these machines, they were done with us. They graduated from us back to bank. So again, we have the ability to do these types of programs, and I'd be happy to discuss that with you. One other thing that is a unknown in the marketplace that you guys are all going to become aware of today, and I generally am the only one that brings this up at SBDC workshops. You could have more than one lender, right? So really briefly, if you have an SBA 7A loan for 500,000 or more, and it's a term loan, and you have a profitable business that's growing beyond the term loan that you took from the SBA, and they put a deed on your property and they have the equity in the property, and equity in the property covers the loan, meaning the bank is only exposed about 20 or 25% of the loan, and your equity way oversees that. You can get a subordination from the bank potentially by working with me. I could fund your AR, your accounts receivable, and give you even more money. You can talk to me about that and I can tell you more specifics. But over the years, I've actually had banks call me with SBA loans where they can't give the client any more money. And they brought them to me and we worked what we call a subordination agreement. So the collateral, the receivables, and certain other assets get into my box, and that is allowed by the SBA. For those of you who are familiar with the term CDFI, these are nonprofit lenders that are in the various marketplaces in Northern and Southern California. It's possible to have Marble Bridge as a lender, and several of these lenders I've worked with over the years where I needed to get the client more money. specifically to get out of what I call merchant cash advance loans, the payday loans, the loans that people are trying to get you to buy that have 80% interest, 60%. I'm going to tell you right now, and we say this at every SBDC event, never take that money, never touch that money. You never make enough money to pay back the interest. And sometimes when you get in, you can't get out. Those people come to me all the time, those businesses, and I need to solve their problem. And I have receivables, and I can fund to give them the money to get out if they have enough leeway. But I do not want to fund all your receivables to replace them with me. And so what we end up doing in that case is I will find a CDFI partner, and I know most of their underwriting, and I could bring them in, and we can go ahead and see if there's a way you can have both of us where they'll pay off the MCA loan. Now, I know SBA rules, for some of you may not be aware of this, have changed. The SBA is no longer allowing you to use that money to pay off those partners, but I know which CDFIs have other money that could be used to pay off those bad MCA loans. So that's something else that's unique about me that generally doesn't work with a bank line of credit. Now I want to just get into, if I ask for underwriting from you, just so you know, I'm going to ask for financials. I'm going to ask for tax returns, a personal financial statement, your accounts receivable, your payable reports, profit and loss statements for the last couple of years. I do have an app fee to bring you in. It varies per client and the difficulty of the underwriting, but most of my the nonprofit lenders charge up to 5 points. So up to $100,000 loan, they might charge you 5,000. My stuff is underneath $1,000. So I'm usually cheaper than anyone else as far as processing. And my application takes 5 minutes to fill out. That's quick. And usually when you're working with me, I don't want the application fee. I don't want the application. I just want the financials and a few other documents from you after we have our initial first phone call. And if I'm asking for that, I believe I can help you. I'm verifying it to see how your numbers look. They may not be perfect. I don't need CPA audited numbers like a bank does. And I can look at those numbers and I can double check everything. And if it's a go, you give me the application fee and the application. And if you're next in line with me, 10 working days, we get it done. And then you can start funding right after you sign with us, if that's what you so choose, or you can get ready to fund because you're getting ready 60 days out. That's fine as well. So a couple stories to tell you. I'm going to tell you my favorite story because in my career, I've never seen a story like this. It's a COVID story. I had a janitorial business, small minority business in LA, win a $50 million contract for the school district down there. 50 million. It's $1 million business. The SBDC brought him to me because no bank would give him the money to fulfill that contract. And they also couldn't get the money from a CDFI. They needed somebody with the capacity to fund millions. I was the fit. There are receivables here. It was sort of an amazing contract because there was no contract. He won it. He got a letter. He said he won it. And when they called him, they wanted him to go. So 3 weeks right before the schools opened up, when Governor Newsom was pushing to get the schools open, it was in April, I think it was 2022, something like that. They called and they said, you have 3 weeks to hire 1,200 people, be here. You're going to be cleaning, supporting our janitorial staff. I called wiping doorknobs. It was not heavy cleaning. We got him into the system. We got it approved because he had $1 million janitorial business profitable. We knew nothing about these contracts. There was nothing in writing except what he told me he was going to charge and what his pay was. And he was hiring people at 15 an hour, charging roughly 30 an hour. So he was going to make unbelievable money working from his home. It was really an amazing story. When we got the school district on the phone to verify the contract, they agreed with all of that. And then the real question was, how was he going to make payroll? Even if he hired only 300 people, when you're paying 15 an hour, you got to pay people weekly to keep them on the job. Bottom line, I asked the school district how often he can bill because I figured they're going to say end of month. And that would be a problem because he wouldn't have enough money to make payroll. And they said to me, right, drum roll, which you can't hear. They said to me that how often does he need to bill us? They let us pick the date. So I said, if he could bill weekly, that'd be great. And they said, that's fine. So he hired these people, 300 to start as he was building it. Couldn't get all 1,200 right off the bat. They were fine with it. And basically, they work a week. The following Friday is when the first payroll is due. On Tuesday, he invoiced. On Wednesday, we funded him. We gave him more than enough money to cover the payroll because he was making double, 15 to 30 an hour. And we gave him 80%, a 30 to 24. So he had more than enough money to cover it and to grow the business and get the support staff. And we made him a multimillionaire. So that's an unbelievable story, but that's the power of invoicing finance. No other method can do what that does. When you go into Whole Foods, and I think they're Whole Foods in your area in the marketplace, you have the refrigerated section, sandwiches, salads. The person who ran that business for NorCal was about a $6 million business. You had to put food in every day, take food out, delivery services, pay your vendors. It's a very cash intensive business and getting paid by Whole Foods. We funded that business, $6 million a year. I had a company providing services to Tesla. This is one more. And thank you, Maureen. Right now, they're putting my contact information on there, email and phone number. And Tesla had a company doing about 5 million a year. And the majority of business with Tesla, true story. It happened when Trump was getting elected the first time when I had this client, and they were scared of Trump, which is sort of funny because you know the story of Elon Musk and Trump in today's world. But back then, Tesla was very scared when they saw Trump was going to win the election, and they actually cut off all business for 90 days. So he had an SBA loan for 500,000. It was just 1 year old. And at the end of the election, Trump won. Everything was okay. The world didn't come to an end at that time. And Tesla said, hey, we know we didn't give you the business. We know that hurt your business. We're going to give you 10 million in revenue in 9 months. However, we want 90-day terms. Now, that means he's going to be billing out $1 million a month and nothing coming in. He'll put 3 to 4 million out. He didn't have the money. So he went to his local bank, a community bank. He sat down. He says, hey, I got great news. We're going to be millionaires. When we do 10 million in revenue, we're going to make 3 million profit. We need way more money from you. And the bank said, okay, and see your numbers. And he says, I know we had a loss last year. Don't worry about it. We're going to be very profitable. So the bank saw the numbers. They said, not only are we not giving you the money, we actually want you to pay off the SBA loan. And of course, the client was just couldn't even believe he was hearing that. But that's how banks operate. You don't have a loss when you have a lot of credit. And so what they ended up, they said, well, you should call Andrew at Marble Bridge. We paid off the bank. We funded him. We put out $4 million before the invoice paid. So we took all the risk for our client because he didn't have the money to pay us if Tesla didn't pay the bill. And Tesla finally started paying. In 9 months, they became multimillionaires and we were done. So that's just another example of our success here. Now, I've been talking for, you can remind me, Kelly, maybe near 30 minutes. Maybe it's time for some questions.
We do have a question in the Q&A box or in the chat box, and it's, our government contract rates the same as for AR, 80%, or POs, 75%? And what are the government contract fees, percentage-wise?
So that if we're talking government, it doesn't say if it's state or federal, but our advance rates are 80% for either and 75 on the POs if we do POs. So our advance rate is for all businesses that we lend to. The federal government actually has a special form to work with us called an assignment of claims, which is one of the forms we use when we set up the federal government. So we have done, believe it or not, we've funded SBA staffing, SEC staffing, the Army, Homeland Security, SEC. I mean, there's been all sorts of agencies that we worked with over the 25 years. So all companies, I just want you to understand when you think about my industry, all companies work with our industry, from all the biggest contractors in the Bay Area to Apple, Google, HP, to universities, Stanford, Berkeley, educational services, school districts, Oakland, I'm working with them right now. And then obviously corporations. And I've worked with companies that have 2,000 small accounts. So we work with all different types of people. They all work within this world, and we make it larger than a bank can, because we could actually write a larger credit limit than a bank can and put it in writing for you to hand to your client to show them that you're strong. Okay.
Okay, cruising through the webinar chat box, greetings and salutations, a little bit of information on the Capital Summit tomorrow, SBA disaster, website for disaster, the boot camp that we went over, our YouTube channel. Oh, great stuff there. Also, information to get started as an SBDC client. Andrew agreed to early to gauge tariff impact on inflation. Glad I didn't go there. Our government contract advances, we just answered that question as far as being 80%. Your contact information, Andrew, right there, your cell phone number, which you prefer people to pick up the phone and call you. Also, your email address and your website are there. Maureen left if you want to leave us a Google review. There you go there. So I don't see any other questions in the chat box, and we are up against the hour. Nothing in the Q&A. You have anything else to add, Andrew?
No, I appreciate everyone's time. There was a lot we covered in a very short period of time. There's more to learn. I encourage you, no matter what industry you're in, whatever you're thinking of doing. I talk to everybody. I talk to people who are a year away from starting their business. I love working with small business. It's been my career. And you have me as an expert now. And I know finance beyond my box, because I have to work with all the bankers. We had 3,000 to 4,000 bankers we work with almost every major bank. So any question is fair game. Anything I can do to help you. But I also refer you back to Kelly and the SBDC, because they have the experts as well, and they'll be more than happy to speak with you.
Well, thank you so much for joining us, Andrew. And it really, the message that I see is that the value of a good profit margin really shines through. And really knowing your numbers and knowing how those numbers translate to where you're making money to begin with, so you can grow. So my last 2 cents worth. Andrew, thanks for joining us. Hey, we'll be back next week. Next week, number 350, webinar number 350. Maybe no hiccup at the beginning also this next week. Maybe it only happens during the first 349. So for Andrew Crone, I'm Kelly Bearden. We'll see you next week. Everybody have a great week. Goodbye.